This section now is about fraud. Fraud. Oops. Let me zoom in, excuse me. All right. First of all, fraud is intentional. It's not an error. So when you do auditing, you know you're looking at the financial statements. You're doing an opinion on the financial statements, whether they're true and fair. They're in all material respect, whether due to fraud or error. Right? Error is unintentional. It's not your fault, or you didn't know. It was not your intention. Fraud, you know about this. You know you're doing something wrong. There are two types of fraud. Number one is a removal of funds or assets. So this is your basic stealing money here. So simply stealing money from the company. But it could be done quite sophisticatedly. For example, through payroll with a fake employee. You put a fake employee in the payroll system, and then there's a wage going somewhere to a mystery employee, but it's somebody stealing money. Teeming and Latin. So this means a fake or fictitious, same as fake, customer. So you put fake invoices into the system, and basically it's another way to steal money. Bogus, so fake, supplier invoice. So money is going out to a fake supplier, and that's fraud. The second thing is misrepresentation. And that's the part that people forget. It's easy to understand the first one. We're taking money out of the company. But misrepresentation, what is that? Well, it's basically because you're an accountant, right? And you're dealing with the reports. So falsify your financial reporting here. And that's not necessarily stealing money directly. Now, when somebody commits fraud, ultimately it's always about money, right? But misrepresentation, it's about not representing accurately the situation of the company. And especially because you're an accountant, you're reporting on the financial situation of the company. So you have the power to change the numbers to fit a fraud. Things like overvaluation of assets. Now this is linked to basically prop up, usually, the share price. Not exclusively, but usually that's why people do misrepresentation. Accounts misrepresent. It's to keep the share price not going down. So overvaluation of assets. Right? Fictitious sales. So this was kind of teeming and ladding above, right? Well, no, because the first one, removal of funds, you're actually stealing money. Here, you're not stealing money. You're just making fake sales to pretend that the company is okay. We're doing lots of sales, but it's not true. Understating. Expenses in the P&L. Why? Because then your profit will be higher if you have less expenses. You can manipulate the depreciation amount, right? This is one of these most sensitive area in the P&L because it's an accounting judgment. So it's just a double journal entry. Suddenly the accountant makes a quick double journal entry and the profit is completely different. So it's a very sensitive area where there could be fraud.